All right, welcome back, everybody. It is Joe, and today we are back with a portfolio update where I'm going to be talking about a mistake that I possibly made, as well as some dividend payout updates for some of the positions that I have, and a few different changes to this series, but nothing super major. Just wanted to get a little bit more defined on some things. So, without further ado, make sure that you stay tuned. And real quick, before we even get into things, if you guys could comment down below, give me a thumbs up, and even subscribe. That would be such a huge thing for me. That would just let me know that this is worth continuously doing these video series. And most importantly, yeah, I would really appreciate it. It goes a long way. So without further ado, I'm going to minimize myself and we are going to get into things. All right, here we go, guys. As you can see, this is the portfolio as of today on Robinhood. But first, we're going to go into Webull because I think that's a little bit better to look at. So as you can see, we are down on Webull. It is $650.64. Last time I did an update, we were doing much better than that. And as you can tell, I got a little bit of a different look for the Webull account. I just wanted to make it a little bit better. But yeah, we are currently down on this position. And here, well, I mean, it's not really fully accurate because we have the average price here per share, and then we have the average price in Robinhood per share, and I use ChatGPT and its magical ways to figure out what is my actual average price per share. So this part isn't really that accurate, but for the shares here, as you can see, the last price that was marked on Webull, not Robinhood, because Robinhood does have the after hours, but the last price is $43.75 per share, which is a phenomenal price. And I wish I didn't make the mistake of not capitalizing on this. Or maybe it was a blessing in disguise, and I'll get into that in a bit. So let's hop over to Robinhood. As you can see, this is the portfolio for the after. I mean, I think this is from yesterday. Oh, this is overnight. It actually says it up here. It says overnight, right under the numbers, and then pre-market. And then I guess this was yesterday post-market up until, after hours and et cetera. So yeah, I mean, it looks good for the day, but if we look for the week, actually, we were doing pretty badly. And as you can see on September 25th, we had an amazing opportunity that I did not capitalize on. And then we got again that same day, another amazing opportunity that I didn't capitalize on. And then we saw another dip on Friday at 11 a.m., which, again, another opportunity I wasn't, capitalizing on in terms of acquiring more shares of positions that I like. And let's go for the month. As you can see, we are still doing good for the month. We are up and to the right. We did experience some dip here, but now we're starting to see this move back into an uptrend, which is good to see considering where the markets are as a whole. But as you can see, not too much has changed. We did get an increase in the WPA shares just because we had those dividends reinvested. This is the total return. So as you can see, we did drop a little bit in WPay, QDTE, and XDTE as well. And then if we look into my equity, this is my current equity in these positions on Robinhood. And this is the last price as of Robinhood. And again, XDTE is a little bit higher here because they do have after hours prices showing. So that's something to be mindful of. But let's get into my investing journal sheet so we can kind of go over what is new. So for those of you who are new to this channel or new to watching my videos, something that I like to do is I like to keep an investing journal log entry. And I've been doing this since I first started. Keeping track of my portfolio, which is August 19th. Now, I didn't start the YouTube channel until a little bit later, but that's just something to be mindful of. And today, this is where we are at now. Something to be mindful of. Ignore this number right here. I forgot to update it, but it's all good. But as you can see from the last update on September 24th, we had $1,790 in asset value, and then now we have $1,776 as of yesterday when I logged in all this information. Today is Saturday, so keep that in mind. But I did not contribute anything more. I do actually have some more income I could have contributed towards this. However, I decided to allocate it to a different investment that I'm putting money towards as well, pretty consistently with. And I'll share that in another video maybe, or maybe towards the end. We'll see. But also we have XDTE, QDTE, and WPay. As you can see, the biggest changes is I did get paid from WPay's dividend this last update, and then it is already reinvested. So now we went from 4.61 shares to 4.65 shares. And again, as you can see, the average did go up by like 1 penny. So instead of $51.10, $51.11. outside of that, not too much has changed. We just gone down a little bit in value for each of my positions. And yeah, we did get paid out our dividends yesterday, the 26th on Friday, and we earned a total of $2. Oops, $2 in total. And for the week, not including the Webull XDTE position, because they don't pay out until like Monday or Tuesday. It's kind of annoying, but whatever. We have about $4.37 in dividends paid out to us. So that's pretty awesome. I'm pretty happy with that. And once I get this actual number, and I do have a speculation of what it could be, but once we get this actual number, I'll kind of go into that. But real quick, I wanted to go into this sheet. So as you guys can see, this is what the current dividends that I've earned for this month for each position has been. QDTE $5.22, XDTE $13.02, and WPay $4.85. Remember, this does not include Webull, so we will see there. And then 1 second, guys. Cool. And then we have our positions here. As you can see, this is the last numbers as of Google Finance. This is where we pull all this information from. And again, shout out to John over at the Dividend Nomad for this sheet. Hugely helpful. But right here is what I wanted to focus on, of course, the market return and total return. So we are in the green for all positions here. We love to see that. It's super important. And yeah, I mean, basically, the one that I should have really capitalized on, I personally believe, is XDTE, which was super cool to see that it did drop down at a good opportunity. I think the lowest that it got to in the market return. So it didn't go negative, thank God. But it did get down to 0.29%. So I think that would have been a perfect opportunity to acquire a few more shares in this position, because I am pretty bullish on it, at least in the near future, because it's following it's closely tied to the S&P 500 for the cover called ETF, and then QDTE. I think that's NASDAQ. Could be wrong about that, but as you can see, QDTE is crushing it in terms of total return and even market return. XDTE is lagging a little bit behind, but that's okay. I think long term it'll do a lot better. WPay as well has been dipping down a bit. As you can see, it's about $1 and maybe like 80 cents. Excuse me, $1.81 in share price higher than my current amount. You know what? It got really close. It got to $52 and like I think 10 or 11 cents at some point. I could be wrong about that, but could have been a huge buying opportunity. And I really want more of this of WPay. I really do. So if there's an opportunity, I'm going to be capitalizing on it ASAP Rocky, right? Outside of that, everything else is pretty much standard, guys. I'm not going to really cover it too much, but real quick, I wanted to discuss something with you guys. So remember how I said XDTE, you know, obviously we have this market return dipping down. The returns are still good overall for total returns, but the market return is starting to dip down. And it might have been a blessing in disguise that I didn't acquire more. Well, I'm about to share something with you. So let's get back into this. So something changed. Something happened here. The distribution rate is at 20% now. And if we go down to distributions, here's what we can see. We lost our 20 cents a share, which is what we were hoping to stay. So since its inception, I mean, there's a couple times back in March, they got 14 cents a share. You know, in January, of course, you know, 18 cents a share, stuff like that. But this past week, unfortunately, oh my goodness, what did I do? Excuse me, guys. This last week, we actually got paid less than the previous few weeks. We got 16 cents a share. Now, I'm not complaining. That's still pretty good, and I'm still content with that. But it was a little bit of a bummer to see that one of my bigger portfolio positions got paid a lot less than before. And to kind of put that in perspective, QDTE, similar styled position, you know, it's a covered call ETF about, I think, the NASDAQ, if I remember correctly. But as you can see, distribution rate is much higher. And the payout stayed above 20 cents. And it's been holding that pretty well, actually. We really haven't seen it dip down too much below 20 cents. One time in June, I guess 2 times in May as well. But it's really nice to see that held at least. But it outperformed XDTE in regards to the dividend payout, the distribution rate. And as you can see, both the market return and the total return, even though I have less position of it. And if we go to our dividend logs, and maybe this is not the best way to put it, but actually, we've been doing pretty good on the accumulation of dividends here. And if I actually scroll back, you can see that about $1.21. And of course, XDTE does pay a little bit more because, I think around probably around like $4 roughly, maybe, yeah, $4 and, you know, maybe $5, something like that. But as you can see, QDTE actually does pretty well for the small amount of positions that we have. So ultimately, I'm at this place where I'm going to keep investing into XDTE, QDTE. This is a small portfolio, these are smaller positions than if I had a massive portfolio. But I'm going to keep investing into these two. I'm going to keep being bullish on them long term because of the type of fund that they are. And as long as they maintain stable dividend payouts, I'm going to be really happy with this. But I think what I'm going to start doing is really look for more opportunities to get more WPay. And I really hope WPay actually stays in the green when it comes to the trend of the chart and more. But real quick, I wanted to kind of go back into, what do you call this? Let's see. Let's go. Oops, this is the wrong thing. I want to go to calculator. I want to go into the dividend channel calculator that they have here, which is a really cool tool to use. So let's just say we got this back in 2025 of this year as of today. And I wanted to compare XDTE to QDTE. And let's just say this is just if you invested $10,000. So if I make this a little bit bigger, it doesn't get bigger. Okay. Just leave it like this. So as you can see, start price, share, significantly different. And what ends up happening is it tells you the amount of shares that I start with and the amount of shares that I end with. So you can see I acquired significantly more QDTE shares than I did XDTE. But of course, that's to be understood considering the price per share is significantly different. The dividends reinvested, it's $8.97 a share versus $8.53. And then total return, 8.35% for XDTE and 13.45% for QDTE, right? So that's pretty good for the total return. Annualized gain, 11.45% for XDTE versus 18.46% for QDTE. And as you can see overall, and this, by the way, this is with dividends reinvested. As you can see, we had $11,345 with QDTE versus $10,835 with XDTE. And lastly, if we didn't reinvest our dividends, you can really see how crazy this is. So we're still maintaining above a 10% total return from January of this or I guess January 2nd of this year to September 26th, which is today. We would be up 14.67% on annualized gain and 10.69% on total return. And we'd still be in that $11,069 region. So technically what this is saying, at least for this year, QDTE would have been a better position to invest into instead of XDTE. Now let's go back to January 1st, 2024. I'd love to see how this looks. And as you can see, yeah, I mean, if we went back that far, again, still great returns for both, and that's why I hold both. But we have XDTE and QDTE, and they're both paying out relatively well here. You have 24.92% for total return in XDTE with dividends reinvested, and 30.56% for QDTE. And we have 15.4% average total return and 18.73% total average return. You would have left with $12,492 for XDTE and $13,056 and 42. $13,056.42 if you went with QDTE. Now, without reinvesting, as you can see, we're still doing pretty good. These are actually a lot closer. And yeah, I mean, QDTE still wins, and that's pretty incredible to see. So it might be worth it, in my personal opinion, for me to maybe invest more into QDTE, acquiring more shares. But again, I do have my current portfolio. I'm pretty happy with it. I just want to increase my overall positions as a whole. So we shall see what happens there. But I don't know. What do you guys think, right? What do you guys think? Should I look into investing more into QDTE and XDTE, or QDTE over? But what do you guys think? Should I invest more into QDTE over XDTE? I'm very curious. Comment down below what you guys think I should do, and I'll kind of get into that. But with that being said, I did want to transition into sharing something. So let me adjust my camera here real quick so you guys can see me and it's not awkward. Okay, now that I've adjusted things, there's something that I really wanted to share. I have an update for you guys, right? So I'm always looking for ways to make the channel a little bit better, a little bit more streamlined. So I thought of doing more short-term goals for my overall big goal. So I'm not changing the series. The series is still going to be $0 to $1,000 a month dividend journey. I'm going to be sticking to that, growing this small portfolio, and you guys get to join me for the ride. And for those of you who are brand new, I got to remember to set the ground rules. My bad. Basically, I'm investing $300 a month minimum into this account and using it to invest into high income ETFs. So yeah, anyways, with that being said, guys, I really was thinking that I should start focusing on short-term goals. So I think my first short-term goal that I'm going to be doing is I want to get to $100 a month in dividends for this portfolio. After that, my next goal will probably be $200 a month. And then after that, $300 a month. And then after that, $400 a month. And then after that, $500 a month. And I think by doing that, focusing on these smaller, shorter term goals, we will get closer and closer and stay more excited and more engaged as we try to get to that $1,000 a month dividend goal. And also, guys, there's something that I've been wanting to do. I think I'm going to be doing a lot more ETF analysis videos and kind of just like posting that and sharing it with you guys. So if you have any recommendations of ETFs that I should be researching, comment down below. That way I can know what I should look into. And if it's interesting enough to me, I'll probably end up recording a video about it so you guys can see it. But without further ado, if you guys like this video, please, all I ask is a small thing. Hit that like button, make sure to subscribe, and most importantly, comment down below so that way I can know that you guys are seeing this video. So really appreciate you guys, and until next time, peace.